Hello, everyone. Good morning, good afternoon, depending on where you're joining us. This is Regina, and I am with Avalara. Time keeps ticking, and we're already halfway through 2025. Over the past 3 months, there's been a lot going on in the world of taxation, especially when it comes to international trade and tariffs. Today, I'm joined by tax experts from BDO and Avalara, who will give us the latest information, spotlight the tax trends they're seeing and pending legislation that could impact your compliance obligations. Before we jump in, I wanted to go over a few friendly reminders. First, we're recording today's webinar, so if you want to listen to it again or even share it out with a colleague, keep an eye on your email inboxes for the link, which we'll send out in the next 24 hours. Next, let's look at the webinar console and how you can interact with us. For Q&A, use the Q&A box underneath the video feed to submit your questions for myself or our speakers. We'll be responding to questions individually as we go through the Q&A box, and we've left time at the end to respond to audience questions as well. There's also a community chat on the console that you can use to interact with your fellow webinar attendees and network with other tax professionals like yourself. If you'd like to check that out, click the icon that looks like a text message bubbles along the bottom of your console. You can also click on that again to minimize the windows if you find that too distracting during the webinar. To start off, let's introduce ourselves and let everyone know where you're joining us from. I'll go first. I'm Regina, and I am in Fort Lauderdale. We've also had some related resources and links available on the console if you're interested in learning more about the topics we're discussing today. All of those links will open up in a new tab and we'll be waiting for you when the webinar is over. That's also where you can download your own copy of today's slides if you'd like to save them for future reference or just get a sneak peek at the topics we're covering today. We do have some additional links available in the slides themselves, so I would recommend downloading them and saving them for later reference if you're interested. And finally, you can also add reactions to today's webinar. I see a lot of people are doing that already. If you want to let us know what you're thinking at any point throughout the presentation, you'll notice a smiley face icon at the bottom of the console. Once you click on that, you'll see some available reactions. Just a friendly reminder that Avalara cannot provide legal tax advice, but will answer as best we can. We're offering 1 CPE credit for today's presentation. For those looking to receive CPE for today, please note that we will ask you to respond to 3 of our 4 poll questions. The poll questions will pop up on your screen for a limited amount of time, so please make sure you're ready to answer when the question appears. You must also attend at least 50 minutes of today's session. Once you've met the CPE requirements, your certificate will be available to download in the Earn Certification box on your screen. Click the icon to access. Your certificate will also be available in a post-event email. Let's meet today's presenters. All right, up first, as I mentioned earlier, we have Daniela Wilkes joining us from BDO, where she's the Managing Director of State and Local Tax. Daniela, it's wonderful to have you with us today. Can you tell us a little bit about yourself?
Absolutely. Daniela Wilkes, like she said, out of BDO, I lead our state and local tax group in our Pittsburgh office. We cover all areas of state and local tax, but my personal favorite is the topic we're presenting on today, which is sales tax.
Very nice, thank you. And we have Brian Smith, Senior Government Relations Director at Avalara. Brian, can you tell us a little bit about yourself?
Sure. I work at Avalara, and we work with state government departments of revenue to design and bring them the latest technology that we offer also to the commercial side of the house. So I spent all my time at Avalara developing products for state governments. Prior to that, I was the tax director at a incubation, which became DirecTV, and that was fun. So I stayed there for 33 years. That's about it.
All right, well, thank you both. We're glad to have you both here with us today. Let's take a look at what we'll be learning. The state of the states, highlights to know, economic nexus and marketplace facilitator updates, momentum with retail delivery fees, tariff whiplash, e-invoicing mandate spread, And then we have time, as I said, set aside for Q&A. All right, we're going to go into our first poll question before we get started. What has been the most challenging aspect of managing tax compliance for your business in 2025? We'll give everyone a minute to answer. And as you do, I just want to remind you that we do require 50 minutes of watch time, and then also answer 3 of the 4 poll questions to qualify for CPE credit. All right, I'll give everybody just another couple seconds, and then we're going to move on and take a look at our results. All right, let's see. So it looks like we've got 2 that are pretty close. Keeping up with changing tax laws, 37.5%, and then determining nexus, 33.1%. All right, you can, if that's still up on your screen, you can continue answering, and I'm going to pass it over to our speakers to get us started with the presentation.
Okay, I think the best place to start, I noticed that a lot of people are thinking about and paying attention to Nexus, which is always a good place to keep your eye on. And then secondly, the other poll question that ranked pretty high was the legislative activity and the way that it's changing these days. And the reason it's changing is pretty clear. Let's move right ahead, and I'm going to show you the state of the states. States have, in general, what we have here is the dark blue states look okay short term. The light blue, they know they have problems. They're not in a panic mode. And orange is the panic mode, where expect to see legislative activity in the light blue states, the orange states, because we have to remember this is a closed environment, meaning the tax revenue that the states collect is their budget. So if they can collect more, they can spend more. And it's not in a malicious way. It's they can give their employees raises, they can get the latest equipment. So it's their job to make sure that they're continually looking at their flow of revenue. And that's why you're seeing so many legislative changes. Trust me, the states loved the Wayfarer case because all of a sudden a bunch of companies had Nexus that have been doing business in their economic environment previously. But that's how we got to where we are right now.
Thanks, Brian. I think that's a really great segue into what we're seeing here. So like he just said, the states that are bright orange, those are the states we're expecting to see these legislative updates in, and that's exactly which states we're talking about today. So the big update in Maryland is this tax to data services, commonly being referred to as the tech tax. Some of you may remember back in 2021 when Maryland expanded its tax base to include software regardless of the method of delivery, and that included downloaded or software as a service. And then not too long after that, they kind of pulled back on it and added that exemption for commercial use in enterprise systems. Well, interestingly, what this change in the law does beginning in July is that commercial exemption from the regular sales tax still exists, but now for those items that are considered services instead of digital products for technology, you have this reduced 3% tax rate. Some of the other notable changes in this law is a lot of things that were previously not enumerated as taxable. Some data processing services, some of the information technology services are now subject to tax. And they also repealed the exemption for custom software and changes to canned software, customized changes to canned software. So a lot happening in Maryland. There are now very few exclusions that would not be subject to this 3% tax. It is important to note that it's either the state tax or this 3% tax, but not both. The other item to note is similar to the digital products and digital goods, how you have the ability to allocate based on multiple points of use. that extends to this new tax as well. So if you have users sitting all over the United States and not just in Maryland, it's something to keep in mind when thinking about what portion of your services or what you're buying is subject to tax. Next up, we have Washington. I left this taxing digital advertising here, even though if you asked Washington, they would say it's a tax on all advertising. However, there are some very notable carve-outs related to some of the traditional forms of advertising like radio, television, physical billboards. So a little bit of a discrepancy between digital advertising in my mind and some of the traditional not digital advertising, which raises a question of consistency between the two. And truthfully, beginning in October, it might be easier to ask what is not subject to tax in Washington, because this is a pretty broad scope that they've added here. We have temporary help services that are now subject to tax, custom website development, live training services. So whether they're digital or in person are going to be subject to tax beginning in October. A lot of changes. The other notable one is the data processing service, which there was that little carve out that was always pretty hard to figure out whether or not your service fell within it to begin with, that was excluded. That exclusion is no longer beginning in October. So it falls within the list of taxable services in retail sales moving forward. Some of the other states that are considering taxing services, so these are states that either had or still have some proposals out there to expand their tax base. Minnesota, what's notable there is a lot of professional services are coming into question. So that's your legal, accounting, brokerage, even some banking services are on the ballot. New Jersey, the most notable there for me was the participatory sports activities could be subject to tax. And then Nebraska, really not active anymore, and not even necessarily sales tax. They were talking about a wide consumption tax. That is not going to happen in 2025, but it was on the table, and it's an interesting way that they were hoping to gain more revenue.
You know, one thing that's interesting, Danielle, is in Washington, they've expanded to all these services, and people need to remember that this potentially, in most cases, is going to put you into a different B&O classification. The nice thing is you're going to go from maybe 10.5% down to 0.471. So you're going to, I guess that's the icing on the cake. I'm really not sure that's welcome news, but every little bit helps.
Yeah, absolutely. So some digital goods and software taxation continuation in the law, things that have gone into or have become effective over the last year or so. Louisiana, beginning in January of 2025, they began taxing digital goods such as information services and software as a service, regardless of the method of delivery. Helpful here, they do have an exemption in place, or a couple of exemptions in place for specific use. So if it's commercial use, really we're talking about business to business, there is still an exemption there for that. And there are exemptions depending on the type of purchaser, such as licensed healthcare facilities. Vermont, last year in July, about a year ago now, they enacted a bill to include pre-written computer software regardless of the method of delivery. So again, software as a service expanding into that area. And then some clarification of existing laws in Georgia and Texas with their regulations. Georgia's is interesting because they technically would tell you that they do not tax software as a service. However, what this regulation did was give us a little bit more detail on what the right to permanent use means and how that would be interpreted. So what they're saying in that regulation is if someone has the ability to download, say, a report or a video, even if the continued use of that is dependent on continued payment, that infers the right to permanent use if you have the ability to download that. So I think that was an interesting update. And then Texas clarifying that marketplace facilitator fees are taxable as data processing. And what I think is interesting about this is Texas was really pushing for this anyways. We saw it under audit for a few of our taxpayers. So it's nice that they're putting it out for other people before they come under audit to have an understanding of what Texas is going to be pushing for on the marketplace facilitator fees.
So being from Texas, I always like to remind people, if you switch the vowels around, it does spell taxes. So, and they tend to want to tax everything. One particular note, back on Louisiana, if you miss this, it's because they had a third extraordinary session that went from December 6th till about the 20th of the month, and they passed about 8 tax bills. And they made them all effective on January 1. So not only did taxpayers have to modify their systems to accommodate these new taxes, but local jurisdictions had to modify their returns so that you could file. And they expected everybody to get this done in like 2 weeks. So thank you very much, Louisiana legislature.
All right. Next up, we just have some updates on taxes on food, an area that we continue to see just a lot of ups and downs in. I think it's a political area. And so some rate changes, as well as eliminating the state sales tax on groceries in Arkansas, increases to the grocery tax credits, and some lower sales tax rates in certain states. Additionally, Illinois announced its amnesty program coming up this year. So from October 1st to November 15th, taxpayers will have the ability to enter into this tax amnesty program for relief on both penalties and to interest. Notably, there is also a remote seller specific sales tax amnesty program coming up next year. So this is not the only amnesty program that is, I want to say, out there right now. I don't know how to word it. There are other states that have announced that they will have amnesty programs. We just don't have those dates yet. Indiana, I think Kentucky's been talking about theirs since 2022. Maybe this year's the year they finally make it happen. South Carolina. So waiting on some dates for these other amnesty programs, but there are a few more in the works.
I think what's interesting is Illinois has made some changes to its remote sellers regulations and laws. And I don't know if this is the right title for this. They might have been aiming to simplify the sales tax for remote sellers, but here's the new lay of the land. If you're a remote seller and have no physical presence in Illinois, you're shipping your product from out of state, they've switched to a destination sourcing rule. And the reason they're doing this is to more an impact not to the state so much, but more to local government. So you would be collecting now the state rate plus the local rate at your destination. The next category is for out-of-state sellers. So let's say you're in California, but you have an inventory in a warehouse in Chicago, and your fulfillment comes out of that inventory in state. In that case, you're going to use origin sourcing. So wherever you withdraw your inventory, you're going to be collecting that local rate. Again, the in-state retailers kind of staying the same. They're sticking to the origin sourcing, but that's Illinois' idea of simplifying something. So stay tuned. It'll probably change in a couple of years.
I'm also curious about how this hasn't been challenged more. Under this model, there is a chance for an out-of-state seller to have to apply a higher tax rate than an in-state seller if it's destination-based versus origin-based. So I would think that would cause maybe an unfair advantage to someone who is in-state versus out-of-state.
Yeah, I think some Commerce Clause attorneys are going to latch onto this once the dust settles from the legislative session, and we'll probably, as you're indicating, see a couple court cases pop up.
And Illinois is not the only state that does it, but it's interesting to see. On to our next CPE question.
Okay. Has your business had to make changes to your finance team processes to account for tax changes that went into effect in 2025? All right, there should be a box popping up on your screen. If you are experiencing some difficulties with seeing the poll questions, please refresh your screen. Hopefully that will make a difference. If you are unable to answer for some reason, please feel free to add that to the attendee chat. All right, and the box on your screen has your ability to answer yes, no, or I don't know. I'm going to move on to the results and share what I'm seeing here. Okay, we've got 53.9% for no, but 31.8% for yes. So fairly close there. And if the speakers don't have anything to share about this, I'm going to actually just pass it back over and we can continue with the presentation.
Sure. Back to how do we make money appear in state treasury's bank account. And the best way to do it is to make more people subject to the tax. And therefore, when we see states adjusting their rules around the Wayfair case, most people, when they implemented Wayfair, followed the South Dakota test, 200,000 or 200 transactions or 200,000 in sales. There are states that are outside of that, but what we have seen is we have seen them notice that you could have one transaction that was just under the financial threshold and, you know, a ton of individual transactions or vice versa. And I guess what they're saying is the count really doesn't matter. It's more what is the volume of your activity. So you see a lot of states, Alaska, dropping theirs on January 1. Don't be fooled. Alaska doesn't have a state tax, but they have local borough, city taxes, and it is administered by the Remote Sellers Commission in Alaska. And you need to, they're very aggressive at reaching out to people shipping into Alaska. Somehow they seem to be finding out who those people are. I'm not sure how, maybe under audit, but they're being very aggressive. Utah is going to drop theirs, or did drop theirs. Illinois is coming up, they're going to drop theirs. And here's an interesting change. In Louisiana, they added some clarity into who is responsible for collecting the tax on accommodation intermediaries. And so this is under Act 82, and you can go out and read it. But it basically says if you're an Airbnb or a VRBO, that type of a facilitator of sales, then you are responsible for collecting the tax. They have carved out the mom and pops who, you know, rent out a room in their house. They don't really meet the threshold or the criteria Louisiana's looking at. Any thoughts on this, Danielle?
Yeah. I would say just from a practical perspective, I can tell you I can count on one hand the number of times that a state has actually questioned a transaction count when looking to whether or not someone has triggered nexus. At least in my experience with the taxpayers I worked with, it just proves to be a little bit burdensome on both ends. And to your point, they're looking for the dollars. It's the fruit isn't worth the squeeze if you have 200 transactions, but they add up to $50,000. And the states have gotten hip to that, and that's why we see that dropping so quickly across a lot of states. Louisiana, I think the other interesting update there is Louisiana has a long history of litigating these accommodation intermediaries, especially the ones for short-term rental facilitators. And one thing to note is, in addition to the sales tax change, this law also changes their responsibilities coming next year in 2026 to collect the local accommodation taxes as well. So speaking of broadening their revenue base, they're not just going after sales tax with these economic nexus laws and marketplace facilitator laws. They're going after other industry-specific local indirect tax types as well. So,
and what's really interesting is you see a lot of tax changes coming out of COVID that were, I would say, origined within COVID. Marketplace facilitators, everybody was ordering online and having things delivered to their doorstep. You know, even the director of the Department of Revenue saw it, the comptroller saw it, and then they thought, aha, how come I'm not taxing that fee? Because sometimes that fee can be significant, not significant in I'm going to buy a house, but significant in, you know, $9 to $15. And if I could get the tax revenue for everybody who set a box on somebody's porch or a meal, that's additional revenue I want to get my hands on. And we're gonna stumble across a few more things that I say come out of the COVID regime, and it probably won't be surprising.
So yeah, looking at the economic nexus thresholds by state, this really just is an overview of what we already talked about. A lot of states, if you looked at this map in 2020, there would have been a lot more orange where we saw $100,000 or 200 transactions. Those states are peeling off and moving just to that simple dollar threshold. Every state that has a sales tax, and even some states that don't, if you talk about these other local taxes, have economic nexus. That is both for remote sellers and marketplace facilitators. So this is the state of the states. Do you have anything to add there, Brian?
No, I think it's a money grab, which we shouldn't be surprised. They're doing their job. And I think you're also going to see when you're audited from the states aren't oblivious to AI, and they've started putting AI into their audit tools. So your audits are going to become a little more thorough, and that's just kind of a shot across the bow to keep your eye on legislation and keep your taxability updated on a regular basis. And as I said, what comes out of COVID, how about retail delivery fees? Let's go get them. Let's collect some money. Let's see what the states are doing. Colorado led this off initially back in 22. They implemented a retail delivery fee, and you start to see other states using Colorado as a model. Minnesota was the second state to implement this. It's interesting because the first state out of the gate becomes the model, so you see it replicated, and you're going to see that also happening in Washington. And they're running about, you know, it's funny because Colorado started at 29 cents, Washington, what are they, about 30 cents. And Colorado has a step down on theirs. They're going to reduce it every year. But what's interesting is there are 3 bills in Colorado to eliminate the retail delivery fee. So as soon as they passed it, of course, you're going to have people on the other side of the issue who want to get rid of it. It should be an interesting tug of war to watch, because the people in favor of it, you can see down at the bottom, we have Connecticut, Hawaii, Indiana, Maryland, New York, Vermont. They're all working on that language to start collecting that revenue. So we're going to see more of these. And the interesting thing about this is, from an operational perspective, how do you collect that? Does it have to be a separate line item like taxes do at the bottom of your invoice, or your billing system print 2 lines at the bottom of the invoice before totaling it? It's not an easy solution in many operating systems, because not everyone has the latest version of SAP running. They might have an antiquated ERP system that's very difficult to modify. So this is no fun for retail, and I don't think the legislature really thinks about that. And to be quite honest, maybe they shouldn't. They're supposed to focus on good tax policy.
Yeah, I will say that the taxpayers that I have worked with activities in Colorado, for example, have found that it was more burdensome for them to try to find a way to implement this, like you were saying, with their systems, not the newest version of SAP, not the easiest thing to get on the face of an invoice. They found that it was more cost effective to pay this retail delivery fee themselves than it was to try to figure out how to get it passed on to their customer. Now, that being said, it does raise the question of, can you do that? We know with sales tax, a lot of times you're often not allowed to do that. I would say it's really important to look at these state-specific laws and find out if that's an option for you whenever it comes time.
And with this trend continuing, if you don't have a ticket open with your IT team to add the requirements into the system, don't wait until the law gets passed, because I don't know if you've noticed, but when I ran a tax department, my change orders somehow made it to the bottom of everyone's list. Marketing, sales, advertising, all their changes went in immediately. So get in line and start working on this before it's an absolute must-have in 6 months.
You weren't helping them make sales, Brian. You were just costing them more money. Just kidding. Helping them stay compliant and out of trouble.
So trying to stay out of trouble is becoming more and more difficult. And I don't know, maybe you guys missed this, but this new activity around tariffs has people rethinking their business plans. So I think it's worth spending a little time in this area. It's a little bit crazy because it's like a river. It keeps moving, it changes. So we're gonna touch on some of the things that are out there and some of the thought process behind them. And we'll start with Liberation Day, which was April 2nd, in a press conference where all these tariffs were introduced, and they were introduced with kind of a persuasion that we're trying to slow down the influx of fentanyl coming into the States or other bad actors in other countries. And the way we're going to do that is we're going to increase the tariffs on those countries that we know products are coming from. And so there are exclusions to that. There is an agreement between Canada, the US, and Mexico that kind of overrides some of these tariffs. And there's very specific things about oil and gas in Venezuela, automobiles coming, parts and supplies coming out of Mexico. But right now we're kind of in a little bit of a pause. And I think that this pause is more of a call to action for states to sit down and negotiate with us. I mean, countries to sit down and negotiate with us so that each of us can find a happy medium, or at least a manageable medium. I don't think we're going to end up with 200% tariffs, but this causes havoc for business, because if you look at what the tariff is, if it's gone up significantly and hasn't been paused, it's going to change the price of your retail product. It's going to make you rethink where you're manufacturing your products, which is the point that Donald Trump's trying to make of, let's try and bring as much, manufacturing back into the States. And if you're not willing to do that, then your prices are going to increase. If your competitors come back into the States, their price is going to be less. So everyone's trying to game the system a little bit, and the system keeps moving. So we really, really, really have to keep our eye on what's going on, because if you look at the dates on here, it's like I think we were seeing changes every 3 or 4 days on tariffs. And a shameless plug is Avalara does a webcast called called Tariff Tuesdays. That's how often they change. Every week we have a webinar that addresses this. So if this is impacting your business, I really think it's something you need to tune into. And if not tuning in, make sure your advisors are keeping you abreast of what's going on, because changes in your pricing don't go unnoticed, and your competition in the marketplace is changing. The biggest change that kind of affected everyone was the removal of the de minimis exemption, which if you look at it at the 25,000 foot level, it was pretty much things under $800. And so this is all your Sheen purchases, all your, purchases from these mass retailers overseas that are fairly inexpensive. I only say Sheen because my wife seems to get a package from them every day. And because it's inexpensive. I mean, it really is. The product might be kind of seasonal, meaning it isn't the most durable thing, but it definitely will be fashionable. But you can see just kind of going down the right-hand column, what the categories are that this falls under. The duty-free de minimis under $800, the non-postal shipments under $800, postal shipments have a flat duty that they need to take care of, and carrier requirements are changing, meaning documentation. They're tightening up that you have the right codes on your documentation. And so you really, really, really need to keep an eye on this. But the biggest hit to the consumer is the removal of the $800 de minimis calculation. So what do you have going on internationally? It would be interesting how many of you look at your international market and think of these four categories, because you have the de minimis exemptions, you have the country of origin impacting what rate you're going to be subject to. You're having an increased inspection and audit of tariff code classification, and all this bounces up against your declared value. So these are all moving elements that if you're dealing with international customers or bringing things in from overseas to support your business, you need to not only know what's happening, but also let people in your organization know, because change in pricing can impact your sales forecasting and other groups. It can definitely, procurement needs to be on top of this. Your RFPs need to be drafted correctly so that when the product hits the dock, the values are tight enough that you can do a three-way match. You don't want to be out of variance by 30% due to a tariff that you forgot to include in your pricing that went on your PO. So there's a lot of operational impact that you need to sit back and think about. I know it doesn't make you feel warm and fuzzy, but it's something we need to pay attention to. So you really need to think about, do you have time? I mean, I had trouble keeping up with what was happening in the States, but now you're having to keep up with these changes in the international market and those four elements. So you're going to have to deal with penalties that you're not used to dealing with, and over under custom charges. And not only that, I think you're going to have other issues with customs on the paperwork not being right, or on returned items, how those are going to be handled. So that's an area that you almost would have to staff to, or have very good advisors that keep your system very tight. Any thoughts on this, Danielle?
Yeah, no, I completely agree with the number of changes that happen and how quickly they happen. Having a system in place is, if you're in a multi-state or multi-country operation, it's not really even with the system, sometimes it's hard to keep up with, right? So.
Right. No, agreed. So I feel for you, but please pay attention and get your advisors, and even lasso your liaison in legal and make sure that they're keeping you abreast of things they're seeing, because sometimes it's hard to cover all the bases. All right, we're into our next poll question.
All right, and just as a reminder, we do require 50 minutes of attendance and 3 of the 4 poll questions answered for CPE credit. If you're unsure that your answer is being recorded, when I move on to the next screen that will pop up, please feel free to answer in the attendee chats. All right, for this poll question, number 3, how have trade and tariff updates impacted your business in 2025? Okay, now you should see that pop up on your screen. There is a chance that that may have slid behind one of the other boxes on your screen, so take a look at that. I'll give everyone a minute to answer. Some of the selections are no impact, minor impact, moderate impact, major impact, or severe impact. All right, let's see what everyone is thinking here.
Wow, those are interesting results.
Yeah, it's kind of a mix, isn't it?
Yeah, and I'm surprised there aren't as many severe impacts, so maybe we're overstating the problem. But
maybe it applies to everybody. It's
that's true.
Pretty equal across the board. It's not.
Yeah. Everybody's feeling a little pain.
And there's been a lot of pausing with some of that. So we'll see come July 9th, right?
I would say some of the biggest impacts that I've seen on businesses aren't even necessarily, obviously cost, but planning. It's really hard to plan in such an uncertain environment when you don't know what your costs are going to be. That has been one of the top topics that have come up when we talk about this with our clients. Notably, the other is just trying to feel out what their competitors are doing as far as separately stating. Can they separately state the tariff costs? Do they care to if they know that their competitors are also in the same situation as they are? Do they feel like they have to? So just really trying to figure out from that perspective how to approach it. It's almost more of a business question sometimes than it is a tax question.
Truly a business question. And I've seen articles around automobile companies taking factories out of mothballs in South Carolina and bringing their assembly work back into the States. And when you say it's going to hit you financially, this is a huge capital expenditure. You're going to be terminating agreements maybe overseas that might have penalties. You're going to be bringing up a new facility that needs probably an upgrade to current technology, and you're going to have to restaff that. This isn't something that happens like a weekend move that takes 4 days. This is something that has to be well thought out, and it's going to take a bit of time. So this is going to have a ripple effect, but it's not only tax, it's your capital expenditures, it's your income tax planning is going to be impacted by this. So the problem is there's so many tentacles. Each one of you might be impacted, maybe not by all of them, maybe by only one of them, but stay on top of it, because once the dust settles, you don't want to be kind of left behind as far as system upgrades and whatnot. So looking ahead, what's coming really? We're getting a little bit of a shakeup with tariffs, but what hasn't hit us here in the U.S., but is very active every place else, is e-invoicing. And so we're going to take a look at countries that have mandates, and we're going to talk about how many of these people are paying attention to. And what we see are countries set a deadline and then they realize it's a little more complicated and they'll push it a year. But but this e-invoicing isn't sending your invoice in electronic format to be received and paid on the other end. It comes with some additional constraints driven by the country. And so let's just kind of step through them. Britain is, looking at what they're going to do. They're going to come out by November. Germany, January. You have to be able to receive e-invoices. Another thing to think about, because you need to, if you're receiving invoices from multiple countries, you have to have the ability to accept all those formats, because for some reason all the countries don't use the same format. But Poland's had this going on since 24. France, 24, they moved theirs out to the 26 year. Spain, they're trying to hit 27 with the hope, they're being very positive. Maybe we can get it done sooner. Estonia, they've delayed theirs 2 years. What's interesting is, and I didn't put it on this chart, but this isn't new. Brazil has had this since 2000, and is it 2004? They have had e-invoicing, which was very cumbersome in that you had to send your invoice to Treasury, have it reviewed, and they validate the taxation, and they assigned an invoice number. So think of that. Every invoice is under scrutiny, and all that data is being accumulated by Treasury. And that's an eagle eye watching what you're doing. And then under audit, what they would do is they knew your invoicing pattern. You had to have a sequential invoicing pattern. You couldn't have gaps on your invoice numbers. So it was a real tight control mechanism. But it also, it's taken them a few years to kind of get the flow going right, but it's not a new concept. Surprisingly enough, I'm not sure why Brazil jumped on it so early, but it's coming to the US. And again, billing systems, receiving systems, accounts payable, all those areas are going to be impacted. And you need to tie into a resource that's going to keep you on schedule for when it hits the US, because again, lawmakers are going to grab somebody's law in a foreign country and say, hey, this looks pretty good. And they're going to introduce a bill next year, and it's going to become law in 27. And again, system changes are going to probably bog you down the most. But this is coming. And, another shameless plug, we are actually, Avalara is pretty much the leader in this worldwide. We have Europe covered, we have Asia, we have South America, Latin America. So we are in all these markets, and do have our employees sitting on some of these panels in these countries, trying to keep them headed in the right direction. So we're guiding policy about what's going to be written. And you need to, connect with somebody who's also doing that and understands, just so you don't get whiplashed like you're getting on the tariffs.
And the real thought behind the e-invoicing, the reason this is so popular in these countries is what they've found, or what they are saying this will do, is reduce the potential fraud associated with claiming bad or not claiming bad. It like he was saying, it adds more control. It also kind of helps them plan a little bit better on what they're expecting their revenues to be with e-invoicing. So it helps lower or reduce the gap between what these countries were expecting in VAT revenue versus what they're actually getting. Just wanted
you're going to see
why it's so popular.
Yeah, and again, technology is going to enter this space, and audits are going to be completely different. So, make sure your BI group is on it and you're starting to incorporate some of this new technology into your review and exception processing on both your outbound documents and your incoming invoices. It's not going to go away, and maybe the caution is staff to this. Start thinking about that. I know it's hard to get people just in general these days, but if you are looking at people, uh, you know, get some of those people that think outside the box. And it's okay to hire someone into a tax department that comes from IT. You almost start building your own internal IT department within the tax department to make sure that these changes are getting into your systems correctly. And that person becomes your voice in these meetings, because you have to go, argue with an auditor down the hall about digital goods or digital advertising. You don't want to have to sit in meetings with IT and say, I need this moved up because I have a deadline I have to meet. So think about that. And once a law is passed, one thing that I found is if you go to your compliance group or your controller and say, I have a problem in that I need to come into compliance with this law by January 1st, 2007, yet based on where I'm at on the map for IT, this won't be done till 2008. Can you help me out? And there's nothing better than having the controller make a call to somebody in IT and get your priority kicked up. So just a little internal politics that you might want to think about.
Okay, let's move on to our fourth CPE poll question. You may be experiencing some difficulties seeing the polls pop up. It may be sliding behind some of the other boxes on your screen, so take a look at that. If you are experiencing difficulties registering your answer, please feel free to add that to the attendee chat. All right, so our fourth poll question is, would you like a follow-up from an Avalara sales representative? So an Avalara expert reaching out to you. Now the screen should pop up on, or the box should pop up on your screen, allowing you to answer yes or no. I'm going to leave that up and move into some of our Q&A. We've got about 8 minutes to do Q&A. We've got a lot of questions. So I will start from the beginning.
Well, can I jump in on one of them, because I was scrolling through the questions and I want to make sure we get to it, because I do think it's a very good one, and I think it came up more than once. So we had some people ask about the Illinois amnesty program and asking to explain more about that program. And so it's not the first amnesty program that Illinois has ever had. The benefit of an amnesty program over a voluntary disclosure agreement is typically the waiver of that interest as well, which a voluntary disclosure agreement doesn't give you. The program that's occurring this year for the general taxpayer, I don't believe, I saw a question come up about if that would include the Chicago tax. The way it's written, it applies to any of the taxes that are currently remitted to the department. I do think it's worth a follow-up, though, if you have a Chicago lease tax or Chicago amusement tax concern, to see if they would be willing to accommodate you as a part of the amnesty program. The other interesting thing about the amnesty program, the one that's occurring next year for remote sellers, is they're offering a blended rate, which we really haven't seen before. So what that does is helps you whenever you're trying to map out as a remote seller into which jurisdiction. You know how we talked about destination-based is the new way of the world for remote sellers. It allows you to apply a single rate when you enter into this amnesty program. So those are some of the highlights around the Illinois program.
All right,
Yeah.
thank you.
Brian,
there's
another some couple questions around the thresholds for Wayfair, and you need to pay attention. And once you do cross the threshold, you do need to get registered as quickly as possible. And it's state specific. I mean, I hate to say that, but we're all tax professionals, and the remedy for some states say you need to go back to the beginning of the year and address it. Other states say prospective. So do kind of check in each state and see what's going on.
That's a really
I
good point.
think,
And some states are really good about explaining it. Like I want to say Ohio, for example, has some guidance out there that it's the next sale after your $100,000 threshold is hit, but other states are silent on it. So you do really have to look on a state-by-state basis.
yeah, and there's a question out there specific to AvaTax about is the system keeping track of these changes on sourcing, origin versus destination? And the system has the ability to keep track of it, but you need to sit down and make sure that your Nexus profile for your company is 100% complete. So the way I suggest doing this is getting an inventory report by city or getting a fixed asset report by location. Probably your income tax team has that most readily available because they're using it in their income tax returns. And you need to make sure that all your buttons are checked for where you have facilities. And then you also need to check your API and make sure that you're truly your ship from and ship to are accurate. I've seen some locations say just put the same, put our headquarter location in ship from and ship to, and we'll be done with it. You need to maybe go back and make sure that you didn't shortcut configuration. That would be my caution. But once you get it configured right, this will be taken care of.
All right, here's a question from Alice about RDF. Can it be treated like sales tax that if businesses or vendor, that they can pay for on the customer's behalf if the business wants to?
What I've seen is, go ahead.
Yeah.
Go ahead. Yeah.
I was just going to say, I have seen taxpayers take that approach. Whether or not it was an acceptable approach in the state that they did it in, it is maybe an answer Brian has. But because of the system limitations we talked about, I have seen taxpayers do this.
And where I see departments of revenue addressing this is in informational bulletins. They're not necessarily changing the law. You won't see it come through in a law change immediately, but they might give a guidance document that addresses this. So make sure you're looking not only at the laws, regulations, and annotations, but also get on the mailing list for department informational bulletins for all the states where you have a significant amount of business. And I think you'll see things in there. I have seen a couple states, and don't press me, I have a hard time remembering what day it is, but some states are allowing the company to cover that fee on behalf of the customer.
All right, we have a question on whether tariff is taxable.
I can try it. Some states have put out guidance saying that tariffs are treated just like any other cost of what you're paying on the products that you're purchasing and bringing in. I believe there are also states, however, though, that have made some distinctions about when those tariffs may not be subject to tax. Have you seen anything different, Brian?
No, I think that's what we're seeing. So you're spot on there. I noticed a question on Public Law 86-272, which you need to be cautious because there's a difference between income tax nexus and sales tax nexus. So I always used to laugh at the income tax planning guys that would come by, and their first thing out of their mouth is, 86-272. And that's more of a substantial nexus, little bit vague there, right? So when you're addressing the sales tax arena, make sure you are on point with the determinations for transaction taxes, which can bleed over into income tax, but I wouldn't take income tax guidance and bring it back into the transaction tax world.
All right, I think we have time for one more question. We're approaching the top of the hour. Can you elaborate more on how states are using AI for audits?
I cannot give you a specific example, but I attend most of the FTA, MTC, and Streamline meetings, and this is a topic for breakout sessions, and they're bringing in experts, and there's companies that are, making money by working with states in this collaboration of public-private to help the states who are already strapped for resources to help them incorporate this into their audit profiles for the guys in the field to use. I don't have a specific example, but if you shoot me an email, I will have time to compile that and I could get back to you.
All right, thank you so much. I have a couple of housekeeping notes to wrap up. If you did not see the CPE certification button or box rather on your screen, you should receive a link and be able to access that in the post-webinar email that you'll receive within the next 24 hours. So just keep an eye out on that. We have just a note on, I guess, a link, and this will be live in the slides that were available in the resources box. And it's a link to the tax changes report from Avalara. So you may want to take a look at that. Crush is our customer conference, and it has gone on tour. And there are dates listed and locations. If you visit events.avalara.com, you can check that out for more information. We have some upcoming webinars that you may want to take a look at. You can check those out. And as a note for Trade and Tariff Tuesdays, I did post in the attendee chat the link to register. Please note that some of the dates are still being activated, and so you should see them on that page shortly. We do expect that to pop up. The next session is going to be a special Thursday edition, July 10th. All right, that's it. That concludes today's webinar. Thank you so much to our speakers for joining, and thank you all for joining as well. Have a great day.
Thank you.
Thank you.